Right, Ramco Cements reported their numbers, and actually the street has been very, very cautious on Ramco Cements. So let's see what's the initial rate that we're getting up on the screen. The numbers are expected to be more or less subdued, and some on the street, they're worried about the competitive intensity. Let's run you through the numbers. On the top line, there was a bit of a miss, and that was because the volumes were a little bit lower, marginally lower. We were working with a number of around 4.5 million tons odd. It missed by around 100,000 tons odd. So that was the reason that the top line was a miss. But what was encouraging is the EBITDA number actually came in better. The absolute number beat estimates. Even in percentage terms, it came much higher. Why is that? Because they're focused on the cost side. And the power and fuel costs came down by close to 25% on a per ton basis. That's because of their focus on green energy. And they've been taking various measures out there, combined with the fall in fuel prices on a year-on-year basis. What was encouraging about these numbers is two factors. One is, earlier in 2026, they said that they'll be moving to around 26 million tons. Now they're talking about going to 30 million tons. And now they've also mentioned in their press release that it will be done at minimum capex. So that's what the street will like. They'll have to quantify what is that minimum capex, but that's important. The net debt, remember, has been moving up, and that's moved up to nearly around 5,000 crores. And the street is getting cautious about this number because that's getting to an elevated level. But encouraging to see that they're given a time span that in the next 12 months, they're looking at selling some non-core assets and raise closer under 1,000 crores. So they've given the timeline as well as the quantum. That's encouraging, and that's something that the street will like. But otherwise, brokerages are cautious on the stock. Whether you look at Citi, they have a sell rating out there. You have CLSA, they have gone ahead and they've downgraded the stock, and they've also cut the target price. And Jefferies as well maintains the underperform. The thesis why the brokerages are cautious on them is you have a new entrant, that's the Adani Group, that's made its presence felt in South India. So, volumes could go up there, keep pricing under pressure, and competitive intensity on the whole could continue. That's why, in fact, for starters as well, the stock is down by close to 1.5%. But what was encouraging is they're focused now on reducing debt and they're increasing capacity at minimum capex. So we'll keep an eye on that one.
Okay.